You're invited to imagine what's next. What the next view you wake up to will be. Where your next adventures will start from. Your perfect space to entertain. And your sanctuary to unwind in. As you begin to imagine your new place, we'll be here to help you find it. Because nothing compares to what's next. Sotheby'sRealty.com.
If you've missed the boat on buying a home in 2023, should you take the plunge in the new year? After all, prices of residential units have risen by 30% and in some pockets by as much as 50% in the last 2.5 years since the end of the pandemic. And renting a home has become equally or even more expensive. On the Urban Agenda, we ask, will India's housing market continue to gallop in 2024? How much further will prices rise? And how do we ensure that a home does not become unaffordable for middle-income families? We have three diverse views covered today. CMD of India's leading developer, Prestige Group, Mr. Irfan Razzack. Also joining us, Anuj Puri, the founder and chairman of Anarock, and Amit Bhagat, CEO and managing director at ASK Property Investment Advisors. Mr. Razzack, did 2023 beat your own expectations?
I believe that the teams have worked hard and they've really delivered the results that we were expecting. And yes, of course, you say we've beat it. We've given a guidance in the beginning of the financial year of March 23, April 23, and then we have still got one more quarter to go. And we have, in 9 months, we've finished, touched that target of what we had said we'll do in the beginning of the year. So that's probably saying we beat the target. Okay. And initially when we started, I said 20% on the overall last year's target of 13,000 and said 16,000. And I think we've reached that figure in December itself.
Anuj, did you expect the calendar year to end on such a high note?
So first of all, Manisha, very happy New Year to you and to all your viewers and to all the panelists. I think we couldn't have started this year better than what Mr. Razzack's statement is, that I've completed the full 12 months target in the first 9 months itself. I think that, is the sentiment across the board on the residential. Clearly, it has been a pleasant surprise. I didn't think that we would be 31% over 2022, which was a very strong close. And I did not expect that the supply will continue to come in. So, another 25% increase in the supply. But Manisha, more than the sales and the supply, what really, took me by surprise was the continuing investment by quality developers in buying land parcels, in getting new raw material, in adding the land to their portfolio. And this has been the highest ever buying of land in 2023. And as we go through it, one other thing that I would really give credit to the developers this time, Manisha, whilst the prices have gone up, but I can tell you is that it is still very much range bound. For many years, they had not passed on the price rise to the buyer. And, you started the show by saying is that over the last 2.5, 3 years, there has been a significant price rise. It is true, but it was also one, catch up. Second is, Manisha, easily the developers could have pushed in a lot more price rise. I think they've been really focused. I mean, look at Mr. Razzack today. I mean, when he's launching, he can easily stop the launch midway and not have 100% of it sold at the same price. But it is all about the momentum, the cash, the sale, to bring down the debt, to move. And that is what mature, market really does.
Amit, though for the end customer and the buyer, he only looks at the headlines. He's forgotten that there wasn't much of a price increase for several years. In the pandemic, you actually saw some slippage in prices and softening in prices. They're only looking at the fact that, oh my God, a Gurugram has gone up by 50%, a whopping amount. Whitefield has gone out of whack. There's high-tech city in Hyderabad, which is trading at unthought of prices today. Do you believe that developers have been modest when it comes to raising prices?
So I think you'll have to look at every city very differently. If you look at NCR, the inventory overhang is the lowest. Secondly, if you look at the consolidation which has happened in NCR as compared to Bangalore or Mumbai, I think the consolidation is maximum in NCR. And because of that reason, the price increase has been the highest. Inventory overhang the lowest, consolidation maximum. So developers have been able to raise the prices because there is a fear of missing out also. I must add here that NRI investors are back. We thought it is a pure user-driven market now, and investors are not coming back. But NRI investors are also back. But if you look at the most sensible markets like, say, Bangalore, Chennai, Pune, the price rise has not been as much as NCR. Financial services doing very well post-COVID has impacted the prices more in Mumbai, and probably the range in Mumbai will be 20 to 40, and probably NCR will be 50 plus, and Noida, because there was no fresh land allotment, the price increase has been far more. So you'll have to look at different pockets. Second difference which I see which is very noticeable is the customer is willing to pay for an experience now. And if the amenities, brand, quality, experience, neighborhood is different, the two adjoining projects can have a different price points completely.
Right.
And that is a difference in the buying behavior post-COVID.
And that is specifically noticeable in the National Capital Region markets, because you had so much of weaning out of developers to be done in this market, and quality differentiation is quite remarkable or stark. Mr. Razzack, you would already have your 2024 plans laid out. What is your own sense in terms of prices and demand in the coming year?
I believe that price should not go up very high very soon. It has corrected itself over a period of time only because of the raw material as well as the construction cost. And it's reached a certain point now. And if for the prices to go up more than this, it will be counterproductive. That the momentum will slow down, the demand will slow down, and people will think 10 times over to commit themselves. So while we are doing what we are doing, and of course we do need the momentum, we do need the sales, but at the same time we have to see that the price is balanced, the customer accepts the pricing, and we have to that tightrope walk has to be done all the time, and that's the sensible way of doing business. If we increase the price too quickly, too high, then we'll be sitting only quoting prices and not doing business.
So what I'm hearing from you, Mr. Razzack, is that the demand momentum will continue, and developers have to be very cautious when they look at raising prices, and they should not go beyond what the buying capacity is. It's not an inelastic market, even with the momentum. Anuj, would you agree? Because, in some markets, there's a lot of market making happening. I don't want to name the developer. I don't want to name the market. But, suddenly that's also created a sense of FOMO. People are actually calling me up and saying, we own a home, but do you think we should invest in one looking at the way prices are going? And I'm like stumped. I don't know what to say.
I'll endorse both the statements that Mr. Razzack said, Manisha. First is on the demand. I do feel is that demand is here to stay. It'll continue. Largely end user. Amit is right, is that the NRIs are back. I think DLF made a statement yesterday that 20% of their buyers today are NRIs. But largely, Manisha, even if they're investors, they're long-term investors. They're not speculators. They're not short-term investors. So which, progresses well for the market. The second is, I was thinking, as Mr. Razzack was saying about the statement, 5-7 years ago, Manisha, statement would have been of pride that the price increase is happening, 50% price increase, 60% price increase. I am like, wow, that is the maturity with which, some of these listed developers or leading unlisted developers are really believing in the way that the market has to behave. Price rise will happen, but to my mind, Manisha, it is 8 to 12%. And that price rise is essentially just passing the inflationary, cost to the home buyer, not necessarily saying is that, let's increase the price because we have the buyers today and let's try and skim the market as quickly as we can. Okay. I think this is here to stay. This is a mature market. This is a professional market, and hence the consolidation has taken place.
Consolidation has taken place, Amit Bhagat, but there are also new players who are entering the market, especially a market like Mumbai. Give me a sense of what you feel is something to keep an eye on for 2024, something that may not work out or could, probably puncture this momentum?
I think there are two things. Consolidation is inevitable, and players like Mr. Razak will continue to gain at the cost of the weaker players. And if you look at the top 35 players, 15 listed, 20 unlisted, you will notice that their market share is around 28 to 30%. But if you go to US, the top 7 cities, the top 15 home builders are responsible for almost 70% of the multi-story condominium market. Our consolidation will not be in that range, but I am very confident that these 35 players who are 28% of the primary market in top 7 cities will definitely become 40% of the market in the next 7 odd years.
Okay.
Again, to answer your point on what can puncture the market is actually how global markets, if there is a recession and continues to be a scare on the job market in the knowledge economy, I think that may, probably not puncture, but slightly delay the absorption, impact the absorption. As far as price is concerned, it's a question of fear of missing out, whether it is equity or real estate. When there is a fear of missing out and the inventory overhang becomes very low, less than 10, less than 8, which is happening in certain cities, then obviously developers are here to make profit. And Mr. Razak has rightly mentioned, the reality index may have given the best returns, but the PAT margins of most of the real estate companies are still in single digit. So if there is 70% product sold and your location is better than others and this location has only 5 months of inventory, you will definitely raise prices. So if there is a fear of missing out and this situation arrives, the price rise will definitely happen.
Okay, but more modest, I'm hoping that for our viewers, but price rise also, I'm looking at, what price points are projects getting launched at. And the 40 to 60 lakh rupee units are actually disappearing from the market. And if I look at a home loan EMI on a 50 lakh home loan, today at 9%, if the period is 20 years, you would end up paying almost 50,000 as your EMI. When we return, I would like to ask my panelists, what can be done to keep prices affordable and encourage home ownership for India's vast middle-income families? Because it seems to me that that segment is beginning to get lesser and lesser options. Stay with us.
You're invited to imagine what's next. What the next view you wake up to will be. Where your next adventures will start from. Your perfect space to entertain. And your sanctuary to unwind in. As you begin to imagine your new place, we'll be here to help you find it. Because nothing compares to what's next. Sotheby'sRealty.com